All right, traders, welcome back. Again, as requested, we're going to do a couple of more videos on how to use the data for daily ranges. So we're going to do January 3rd, the first trading day of January 2023. So we'll start with that day. So Tuesday, January 2023 was the trading day. Again, we draw our support, our monthly, weekly support, supply, demand, support, resistance before the trading week begins. So as you can see, we drew this line here before the trading week began, and then we have this monthly open, monthly close, monthly high, and then we line those up with the week. So now we have the weekly lows, weekly highs, weekly open, weekly closes. So all of these areas are already lined up and ready to go. So now what we do is we go over to the daily, and then we'll pull up our data sheet. Now this is the January data sheet right here, January 2023. We're actually doing January 3rd, so this data would not be here. So we need to go to all of the month of December. So we have all of the month of December data for the daily range in order to start preparing for the trading day on January 3rd. So let's start. Looking at this data right here, we see a high of 3,500, 1,700, 1,600, 1,200. So right now we're thinking between 2,500 and 3,000. That would be when the pip level starts reaching up into the 2,500 level, and the charts start moving up into the 2,500 level, then we'll know that we should start looking for an area of retracement. So the week before we see 3,600, 1,400, 1,500, 1,200, 3,500. So we see one day in the 4,000s range. And then we may go back and look at how many 4,000 days are there in December. There was one that went 4,400, one that went 4,300. But the average days, the high average day is really 3,500. And that's just by going back and looking at that data first. So then we'll look at an average. So we can start saying before this trading day begins, before the 2300 hour of this day on the Tuesday the 2nd, before the 2300 hour on this day, then we can have a plan in mind for when we get to the London New York session based on the pip move. So we're in an uptrend. We are in a steady uptrend, and we just had a break of a triangle here. And this would be pattern recognition. So we just had a 2,000 pip break of this pattern right here. $2,000 pip break of this triangle pattern right here. An ascending triangle. So we would expect price to break out, and then we would expect price to retrace, and then we would expect support to become resistance, resistance to become support. And that happens on a regular basis in every single market. So when you study and you put all this together, you will become a consistently profitable trader. So on this day, from the data, we have our data pulled up. We already did our data study for the daily range. So we're in our minds, we're saying when we see the day approaching 2,500 pips to 3,000 pips, if it gets up to 2,500 to 3,000 pips, then we want to start looking for an area of supply and demand, support and resistance, to place a trade that is going to go with the orders in the order block. So here's what this day did. We start at 00, 2300, start at 00. Asian session comes up to an area of supply that's 1,000 pips. Now we're in the strong uptrend, 2 o'clock Asian session. Now we're getting into close to the London session open, and the day has already moved 2,700 pips. 2,700 pips. And then we already drew a line of support and resistance, supply and demand at the 1850 order block. Now again, the 5 zeros and 0 zeros, always look on the 5 zeros and 0 zeros. You could actually do a study where you would put on your chart 50 and the 0 zeros, 1815, 1800, and then all the ways up, 1805, 10, 15, and then see what the price does around those areas. All right, so the day pushed up. We're almost at 3,000 pips. We would go back to our data, and in the last 5 days, on the 30th, we had below 2,000, 29th below 2,000. In the last 5 days, we only had one day above 3,500. So the trend in the daily data, and if we go back 2 weeks, the trend in the daily data says that we're actually at a high pip value, a high pip range for today, entering into the London session when we know that buyers and sellers are going to enter the market. Now, this is the first day back to these levels and the first of the month. And then what have we been saying in all of our videos? When gold enters into a supply and demand level at the beginning of the month, or there's new highs, new monthly highs, new monthly lows, gold always retraces at least 1,000 pips. At least 1,000 pips. How do we know? Because we have studied our charts. We have backtesting tools, and we studied all of this data from last year. Every single day, every single month, when gold got into these areas of institutional supply and demand, support and resistance, gold retraced up or down at least 1,000 pips. So that information alone gives you one profitable trade every single day, every single month, where you can be consistently profitable and you can grow your accounts for financial freedom. So today, what we're looking at is the first day in January, and this is how we would use the daily range data. Again, we'll do this for practice. Before the day began, we plot all of these levels out on the chart, and then we go to our data, our daily range data. We would look at December, and then we would study all the data for December, and then we would start planning. Then we would go back to our charts. Then we would start planning how we can use this data as an advantage for placing predictable trades during the trading day. So we go the hour, and then we'll see what price does. So our first trade signal here would have been in the London session. The London session, where we got a 2-bar pin bar, 7 o'clock. We would have placed the trade right here. Stop loss is right above trade entry, and stop loss. And then we would have let the trade run. Now understand that this may be a daily high. This level right here may be a daily high. And what we usually do on the chart is we'll mark a daily high so we know that this may be a daily high. So if price comes back into this area, we know by our data studies that the price might not move much above this area. If price does move much above this area, then we have another selling opportunity. Now we do have a buying opportunity in the the New York session. We're going to get some buying opportunities because we have areas of support and resistance. Price broke through. Price broke through resistance. And then now the resistance has become support. And then we have a break of a pattern here. A break of a triangle pattern here. See the pattern here, triangle pattern here. A break of a pattern here, and then we would expect price to move into these areas right here before the trend would continue. And that happens on a regular basis. Now we will be doing pattern studies. So check back and continue to grow your knowledge of the markets, how market moves, and you'll be a consistently profitable trader. So let's see how this whole day played out. For the New York session. Alrighty. So price did what we believed it was going to do. What did you see when price got back into this area right here? That the daily high held. That means there's a lot of areas of a lot of orders in the market, a lot of sell orders in the market that drove the price down. Then support became resistance. Resistance became support, and then our second trade signal. You actually would have had two trade signals here, one here and one here, at these levels of support. So if you're up in your trading, you would have had two trade signals for a very profitable trading day in these areas right here. So our mind frame, our thinking is that we've got a daily move. We have a daily move that has already gone from the 2300 hour. From the 2300 hour, the daily move moved past 2500. So right here, we're saying, all right, we're at 2000. And then now London prices moved up into the London session. Now we're at 2700. Now we're at almost 2800, almost 3000. And then we're entering into an area of supply, demand, support, and resistance. So we would go to our data. You can always pull up the data sheet and then say, all right, we're nearing these average. Now, if price came up to 3600, then we would have been ready for the 3600 trade with the levels that we had already drawn above here. So price did not make it to 3600. An average would have been around 2500 with this data here, and that just gives you an edge. Price didn't have to stop here in reverse if there weren't orders here. The orders may have been found 500 pips up. But we already know that the orders would be found in daily high, monthly low, monthly open, monthly close. So we already know the orders would have been found in this area right there. And we would have had a line drawn on the chart. So when we see the daily average approaching the extremes of the extremes in the data, then we can place a trade with a high degree of predictability where there are orders in the market. Now again, the market only moves because of why? Buy orders and sell orders. When there are more sellers in the market, the price will go down. When there are more buyers in the market, the price will go up. All right, here's to consistently profitable traders in 2023. We will do another daily range video, and then should these videos help you trade, come over to our YouTube channel. Be sure to subscribe to the YouTube channel. We want to continue making these videos. We need subscribers and interest in the channel. Then come join our free group where traders who want to trade gold and learn how to trade can post ideas, and grow a community. And then if you want to get more in depth, look at our courses and look at our data services. Alrighty, looking forward to helping more traders become profitable in 2023. See you in the next video.